Hey everybody, it's Pete. Welcome to Stock Trading Pro. In today's episode, we're going to break down sector rotation and we're going to talk about why it took a little bit longer today. Look, the stock market is a bearish, choppy mess right now. So we really had to dig a little bit deeper, do a little bit extra research for you this week. Watch the entire video, take a lot of notes. There's a ton of stuff that we uncovered today that you really needed to go below the surface to find. If you have any questions, absolutely leave a comment below the video. I'd love to hear from you, especially about any of the ideas and the rotation that we talk about this week. Also want to bring up something that's pretty interesting. Elon Musk is obviously in the news all over the place with Tesla earnings, the stuff that's going on with Twitter. I just finished this book. We get a lot of good questions about stuff that we read, whether it's for the market or anything related to that kind of stuff. This book is fascinating. I think you'll like it if you're fascinated by Elon Musk. Have an awesome day. Have an awesome weekend. And I'll see you for tomorrow's Stock Market Live. Hey everybody, it's Pete. Hope you're having an awesome weekend. We're going to do a little bit of sector breakdown now. Look at some of the pockets of opportunity. Probably the heavier side of the market is the bearish side of the market right now. So if you're okay with shorting, there's going to be plenty to do. But we're actually going to do a little bit of a deeper dive into individual industry groups. You know that we like to do stock market sector rotation and start there. So if we take a look at Thursday and Friday, and specifically last week, pretty ugly real estate at the top of the sector. Looking over the month, consumer defensive is really where I'm going to be leaning on a little bit. We're going to break that down in a second. But what I want to do first is I just want to point out to everybody, as much as there's a lot of talk in the stock market right now about the Fed interest rates that are about to come out, inflation, there's always going to be pockets of opportunity in companies that are going to thrive in tougher economic conditions. And right now, we got a good question last week about why are we seeing this, where real estate and the real estate group is actually starting to shine. Why is that happening right now? And it really comes down to a couple of things. Number one is real estate is a little bit better investment right now. And right now is being the key word there. Number two is with interest rates going higher, and obviously now there's a big discussion about how interest rates are going to be affected. Essentially now we start to break it down into why. Right? Why is real estate becoming or has been on fire right now? It's because everybody's trying to lock in those interest rates. Housing market's on fire right now because people are trying to lock in those interest rates. There's no other way to put it. So we just talked about real estate. Let's actually break this down. I'm going to actually go into the month. You can see real estate here. Consumer defensive, we've been talking about for a while. We'll break that down as well. But I want to start over here on the real estate side of things. Now, when you're looking at pockets of opportunity, and actually, let me break this down even more for you here. We go into groups. Normally, we'll start here at the sector level, but we're going to break it down on the industry level, and we're going to go into performance. And specifically, we're going to look at the week, and we're going to look at the month. And you can see here REITs, hotels, and motels, which actually have been performing pretty well. We'll take a look at that in a second. And residential, and specialty. Real estate is and has been a place to be right now, but I want you to keep this in mind, and we've talked about this quite a bit over the last, let's say probably the last several months, is the fact that real estate is on fire right now, and one of the biggest mistakes that people make is getting involved in that group too late. Whether it's buying into the curve of that move too late or even just buying into the next swing trade too late. So we want to break this down a little bit. And we're going to, obviously we're talking about REITs here, but I want to break this down even more. We're just going to go straight into real estate. Now there's 280 stocks that fit that criteria. Now I want to show, this is going to be the difference between being ahead of the curve versus reading the headlines too late. So, a big part of what we do is we start out with sector rotation. We'll give you the sector rotation last week heading into the week. So you can actually see here the 18th. That's actually wrong right there. Let me fix that. That's actually heading into the 18th. You can see we're actually okay. Nothing on fire, but the month was still actually looking pretty good. And then this was last Friday going into Monday. Not horrible, but you can actually see financials weren't doing that good. Consumer cyclical was really not doing that well. And again, we keep talking about this. What is going to perform well in a high inflation environment, which is what the Fed, we have inflation where our dollars are not going as far. Just go out to lunch right now. And we have interest rates going up. So it's the interest rates that are going up that are trying to cool the inflation. So it's going to be impacted by that in a big way. Consumer defensive, which is the stuff you need no matter what. Consumer cyclical is the stuff that is probably a little more expensive and stuff that you don't need. So it's also known as consumer discretionary. So it's probably a better way to word that. Consumer discretionary is you have to make a discretionary decision if you need it right now. Consumer defensive, also known as consumer staple, stuff you need no matter what, Band-Aids and that kind of stuff. So what companies does that affect? I'll just throw a couple right out there just to give you, we'll take a look at, do a little bit of a deeper dive, especially as the week unfolds here. Consumer defensive, Walmart. Everybody and their grandmother goes to Walmart looking for deals. Well, what would be consumer defensive? Well, consumer cyclical. Do you really need to buy a electric vehicle right now? Do you need to go to Nordstrom right now? All of those kind of things. So again, I'm not knocking or praising either one of these companies. We're looking at the data and where we are in the cycle right now. So as we move through the week, we're kind of neutral still, but you can see the month, which is the last 21 days, a little bit more red starting to creep in there. Not as many good positive days. And this, just to give you a heads up on here, it's sorted green or red based on whether or not it's up or down at least 1%. So again, we're working on tracking the flow in and out, right? So this is now Monday's trading going into Tuesday. Energy remaining strong. But again, if you've been following and tracking the energy sector with us, none of them have really been showing any kind of momentum. They've really just been kind of hanging out there. And now there's a whole other conversation about energy and how much oil is coming to market now and whatnot. Basic materials are staying strong, but then the earnings started to unfold this week. So now you're going to watch them start to slide down. So this is the end of Tuesday. So this is going into Wednesday, right? So we pull this list up. We curate this from a couple of different places. Tuesday into Wednesday. Okay, not a bad day of trading, right? Wrong. It was actually fantastic. So we had mediocre into Tuesday, where a lot of the market, this was really a broad-based rally where you could just sit up in your seat and say, oh my gosh, hang on to this. And again, if you're watching this for the first time, this is why you have to do this every single day. And I'm going to give you a little bit more of a heads up on how we're going to do it here, how we're going to do it here, how we're going to break it down here as well. But let's stick with the charts right now. This is an easier way to do it, breaking down the spreadsheets. So this is heading into Wednesday based on Tuesday's trading. So you go into Tuesday saying, okay, where is the money flowing? Now, out of nowhere, consumer cyclical rallies. Now, there was earnings mixed in here and all that kind of stuff. Consumer cyclical starts to rally. Industrial starts to rally. Now you're like, all right, there's something different going on here. But this is really the bigger one. Remember, we talk about order flow over time. And where is the money flowing from one day to 1 week to 1 month? We start to look for patterns, right? Healthcare is starting to work its way down the list. Let's go back to Monday. Healthcare, number 9. Healthcare, number 11, actually. Healthcare, number 11 at the bottom of the list as well. So Tuesday into Wednesday. Wednesday was lining up as an amazing day. Turns out we actually did have a higher opening, but we did not hold the open, which you can see here with hardly the same degree of stocks that were strong. Now, what's interesting is you see healthcare remaining near the bottom of the list. Now, these are the kind of things you need to learn to pay attention to in order to give yourselves some types of opportunity. Now, if you are a regular viewer of watching these videos, you know that healthcare was on fire for the better part of 4 or 5 weeks. So when you're doing this every day and you're tracking it and you're going in from stock to stock, you start to realize healthcare is breaking down. You're not buying that pullback with the same conviction that you probably did 2 weeks ago. These are the little things that Ben Hogan said the secret is in the dirt. When you do that little bit of extra time, that little bit of extra game planning, you start to notice, yeah, that might be a pullback. But when you start to look at healthcare and you start to see which stocks are positive, we're going to get into this in a little bit more detail. This is positive from the month, which in this case is from the first print of April. There's not one stock other than Johnson & Johnson up for the week. And even Johnson & Johnson was barely up for the week. So most of these stocks, and just to give you an idea of what this actually looks like, that's the size of the list. But when you add positive from the month, now we're talking about how strong has that stock been, or the sector, I should say, been this month. So in this case, the month of April, and it's fallen off a cliff compared to where it was prior to this. And we can actually get into that in a second. So healthcare is working its way down. So healthcare is a short sale. Technology has been a short sale. We've been watching some of the bigger technology stocks, such as AMD, NVIDIA, We'll pull those up to give you a little bit of a deeper dive into those guys right now. And let's actually put this on the daily chart. Again, if you're a regular viewer of these videos, you definitely want to sign up and make sure you subscribe. This was the breakdown that we were looking for. AMD has some more room to go. NVIDIA has some more room to go. When they start cracking these kind of big levels with volume, with closing on the lows from one day to the next, from 3 weeks in a row, bearish U-turn, well offered, and closing on the low. These are things you have to start to pay attention to. So when you start to work your way through the best opportunities, it's critical that you start to notice where the money is from one day to the next. Now, I got a good question the other day about, should I watch only the top three or the bottom three? And the answer is no. You have to start to notice the trend of order flow and how one sector starts working its way towards the stop, how once towards the top, one sector starts working its way to the bottom. It's these things you notice. It's not the absolute, just look at the ones at the top. Of course, you're going to, but you have to do it every single day and notice things and then dig deeper. So actually, as we talked about before, we're getting into real estate, and we know this, the sector itself. And let me actually just break that down for you again. This is going into Monday. Real estate is at the top of the list, but weak with the rest of the market. Look at the rest of the market on Friday. For the month, it's actually still hanging in there, and it's actually positive on Friday with the beating it took, positive for the week by a decent amount, but the only sector that was positive by anything all of last week. So we're just going to, again, just giving you the instruction, we're just going to break it down a little bit more and get into the group of how we would take a look at it. So now you break that down a little more. We want to go into average volume. We're going to start out with over 1 million. And then we're going to go to average true range of at least $1. So we want to break that down now even further. We also want to know which ones are strongest for the month. So we're going to cycle that back down to the month. That brings it down to 16. And we also want to know what's above the 50-period moving average, which is a minimum criteria. So we got a pretty good list here right now, but that's not enough. That's actually where, when we talk about the list of the top stocks and we start to work our way through this list, this is just the stocks that meet the criteria. Then you have to go and figure out whether or not there are actually trades in there, okay? So now this is the list of 16. Now we're going to go to charts sorted by the month. Let's actually break that down, sort that by the month. And now we're going to go over into the charts to actually see if there's some ideas. Now, this is what separates you from somebody who says trading doesn't work from somebody who does the extra work. Now, you're looking for obvious order flow. You're looking for a pause. You're looking for a couple of days pulling back, and these are going to be the opportunities. PLD is actually a really clean trade that just broke out and pulled back to support. Let me pull that one up for you. And we put that on the daily chart here. So that's actually one of my favorite setups there. And you can actually see how clean this pullback is. And we actually have a potential change of trend here. Uptrend, broke the downtrend, but then rallied and took out that high. So we're actually sitting there again. And now because that broke, we're now drawing a new trend. So we're not in a box anymore because we actually broke this to the upside, and now we have a picture perfect pull back to the downsides. So this is actually one of those trades that I'd actually be looking at for Monday. So you can go through that list and pull up the real estate group right here. So you could actually freeze this and take a list. Actually, you know what? Let me go back to here to performance. If you want, you can take a snapshot of this, go into this list and see if there's anything that matches your personal criteria. I can tell you that EQT has been one that's been in the community for a while, and that one's actually pulling back right now as well. And if you notice, we actually had exhaustion on this bullish gap here, so not shocking it pulled back, but pulling back into an area that we would now consider. So breaking this down and heading into Monday, which would be April 25th, a really, really bearish, I was going to say bloodbath, but bearish tone to the market. Now, here's what you have to fight. You have to fight chasing. As much as you can't fight chasing it to the upside, you also can't panic to the downside, so you need to have criteria. So now we're actually going to break this down a little bit more to give you a feel for what's going on over the bigger picture. So this chart is the weekly chart right here. You see time frame is weekly, and this one is the daily chart. So you can actually see here, Lilly, look at how the healthcare stocks are just taking a pummeling right now. But what I want to do is I want to point you over here to some ideas. Now, what we're going to go across here is you can see I have it sorted by the monthly. So if you could visualize a monthly candlestick here, and you can actually see it's sorted by change from the open on the monthly candlestick. So you can see we actually have some of them sorted out pretty cleanly here, right? But what I want to do is I want to break that down a little bit further. I want to do positive on the month, but also positive on the week by at least $1. So we're going to break that down a little bit further. So we're going to go to the weekly. We're going to go greater than $1, and you're going to see a lot of these stocks disappear. So you can see now nothing here is negative. It's only green. And we're actually going to break this down even further. And we're going to add another column here. It's not coming in. All right, doesn't matter. You can get the column right here. Okay. So now we're going to take a look at these charts. We're going to see which one of them actually deserve our attention heading into next week. So obviously Twitter has massive news right now with Elon Musk. But the interesting thing is it actually broke out here on decent volume. So Twitter, communication services. So bring that in the back of your mind. Communication services. Is Twitter going to be held up? Is the communication services sector going to be held up? So we're actually right here, which is at the bottom of the list, ironically. But now we want to break this down. There's 288 stocks in there. Again, we're going to go to all. I'm going to go average true range. I usually look over $1.50. So I'm going to give you the actual criteria that I use right now, over a million. So only 23 stocks meet that criteria. But now we're going to break it down even more. Can Twitter and Elon Musk drag this whole group higher next week? So these are the kind of things you have to pay attention to. So these are the 3 stocks heading into next week that are actually showing some signs of life. And look at EA there. So you're starting to see how this is the way that you are ahead of the curve, as opposed to reading the headlines or chasing something 3 or 4 or 5 days after the move starts. This is the kind of work that's required to be put in. So that was just one. That was communication services. So now Target, we've spent a lot of time talking about inflation. Your dollar's not going any further than it was. Matter of fact, it's going less. So what kind of companies such as Target would we be looking at? Well, now we're going to break that down a little bit more, and we're going to put Target in here. Okay, we're going to put Target. We're going to go into discount stores, which you can see here, it's consumer defensive. And now you have another list here. So we're going to go to all. Again, we're going to go to average true range, over $1.50. There's still a bunch of them in there. Average volume, I'm going to go to over 1 million because we're going to talk about some swing trades here. And that brought it down to this list. We're going to which of these stocks are also above that key moving average, and that broke it down a little bit more. So now we're actually going to go to performance, and performance for the month, which in this case is the last 21 days. So now we already know consumer defensive, Dollar General, Target, Walmart, Dollar Tree, BJ's makes sense, and Costco. So that's another list of stocks, sector rotating in and out of that area. Now, what about the other side of the market? How are we going to work the side of the market that is the weakest? And we just went over consumers communication services. We're not necessarily looking to short them. We want to find the ones that are the strongest, look for spots to buy. We found 3 of them. Now, basic materials getting hammered. If you happen to catch last week, Alcoa, oh my gosh, just got absolutely destroyed after earnings, which should not have shocked us because it was negative 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days prior to earnings coming out over here, and these 2 bearish gaps to the downside. So I'm not nearly going to look at that. Let's take a look at some ideas that we can actually lean into a little bit. So we're going to go back to this sheet right here. So again, one of the big things that we discovered, or in our community we were watching last week in a big way, was industrials, United Airlines, Delta Airlines, obviously being held up by the lifting of the mask mandates, all of that kind of stuff, right? So let's go a little bit deeper into industrials, see if there's any money flowing into into industrials that we can take advantage of next week. Okay, so we're going to go right back into that list. So we had real estate in there. Now we're going to go to industrials. I'm going to look for some opportunities up for the month, above the 50, meet my minimum criteria. Again, I might want a little bit more than that just because of volatility, see what kind of opportunities we have. So that brings it down to 14 stocks. So now we're going to sort this by the month as well. And look at that. You can see United Airlines, Delta Airlines, Avis Budget. So what are we looking at here? A lot of travel. The travel industry is expected to have a monster summer. Okay. Alaskan Airlines. So let's actually go into that list right now and take a look at some of the ideas. So again, big gap in United, big gap in Delta, a bullish gap in Hertz. Is that Hertz? What's the name of that company? Avis Budget. Southwest Airlines, right? Alaskan Airlines, excuse me. Waste Management, all right, that's breaking down. I probably wouldn't be looking at that. So I'm only looking at the airlines right now as far as the breakouts. And I believe Lockheed Martin and Raytheon were also punching through. No, so they just pulled back. So we're going to look at the airlines next week. They broke out and pulled back. So let's go over that list again. AAL, really clean breakout. Pause for a couple of days. DAL, LUV, and ALK. By the way, that's actually one of my favorite patterns there to be buying into. So again, let's work our way through that list again as we keep cycling it down. Again, all the stocks on Wall Street is just coming down to this. Now, what about this group right here? PM. We mentioned that before. We've been watching this since it paused over here at the 50. Philip Morris. What else might be looking at? Well, how about Altria? Also in the same group. Broke out, pulled back with the rest of the market on Monday. So PM and MO, both stocks, be keeping an eye on next week. Both of them pulling back with the rest of the market. PM, MO. So again, look at how solid these pushes are to the upside. Everything pulled back on Friday, so not a big deal. So let's keep working our way through the list. So working our way back down, IBM. Technology is getting absolutely hammered, but IBM had great news on their cloud business. There's going to be another idea I'm going to be keeping an eye on next week. Procter & Gamble, what did we talk about before about consumer staples? Looked really well. Giant bullish engulfing candlestick, hit resistance at 164, pulled back. And one of my favorite patterns, bearish U-turn into well offered with support just below here. Looking for this to open down, find some buyers, and come back. So you're starting to see how we're working our way through the list of ideas without predicting anything. We're just paying attention to the areas of the market that would set up in a way that creates a little bit of an easier trade. Now, energy actually traded into a bearish U-turn on last week where it opened above and below and closed below the prior week. So that's a really negative pattern. So we'll be looking for the energy stocks to break down. So if you're comfortable with short selling the market, we're going to go over to some of the ideas in the energy group. So we're going to go over here again, but we're going to do it on the opposite side of the market if you're comfortable with short selling. Now we're actually going to go month down below the 50 period moving average. And now we're going to sort by performance, and we're actually going to take a look and see which of these makes sense from a short selling side of the market. And you can see what group they're in. Let me actually go over here to overview, and you can see oil and gas dominating the list. So now let's take a look and see if there's any short sale opportunities that are not too far extended from the optimal entry. So these are actually pulling back pretty hard after a breakout. And it actually looks like there's still decent uptrends here. So I'm going to take a look at FANG, EOG, and COP. Let's take a look at those guys right now. So if we're just mapping this thing out right now, and we're just doing a really super quick dive on this right now, FANG is actually pulling back to support. So that's going to be interesting. EOG. Okay, same thing. You can see how we've been working this chart for a while now. EOG. So this is, it's interesting. This is what we're talking about, that you can't be so quick to just jump on the short sale the first time it breaks down. Pretty interesting. All right. All right. So those are the stocks there. Energy pulling back, but doing a little bit of a deeper dive. It's the first pullback off those highs. Is that a breakdown? I don't know if it's a screaming breakdown. I have to be honest with you. So again, this is doing the work. It's just two big giant days. That chart's a little bit messy. All right. So let's continue to work our way into the list, and we're going to break it down a little bit deeper here. Let's go to the big three first. Obviously, a bearish engulfing candlestick in the SPY, well offered in the NASDAQ, and bearish engulfing candlestick in the Dow. So they got hit pretty hard last week with the rest of the market. So the question right now, is there any pockets of opportunity that I could be looking to be a buyer other than the ones that we just broke down? And again, we just talked about consumer staples, which is consumer defensive. So we're in that right area over there. Might not be the sexiest group. However, let's go to another one that everybody has been talking about recently, which is, again, not the sexiest group in the world. But if we go over here, utilities. Utilities is the one that we are paying attention to right now. So let's actually break this one down in the same way. So we're going to go over to screener. We're going to go over to the template. We're going to pull up utilities. And with that criteria, I'm actually going to go a little bit lower here on the minimum criteria, over 1 million shares per day, average true range of $1 per day. So that's liquidity. And that is volatility, which means from one day to the next, we have a chance to make money. So I want to get this across, that my criteria of 2 million shares per day and average of $1.50, average true range per day. So volume, average 2 million, average true range $1.50. That's more for my day trading criteria, because we're talking about a little bit longer term. We're not talking about day trading. We're talking about setting up trades for the entire week. I could loosen that up a little bit because I'm going to work my way in and out of those trades. So we know that utilities were strong. Now let's break this down a little bit further above the 50-period moving average and having a positive month. And that brings it down to 21 stocks. So let's actually go by performance again, sort it by performance. And again, this might not be the sexiest thing in the world, but CEG has been in our radar for the entire week. I know a couple of people in game planning it. So look at that trend in CEG and now has just pulled back. So we're looking at an opportunity to get long here. That is a really, really clean move to the upside. And actually, we ended up getting two different moves. We had that one there, and then it went a little bit parabolic. So you actually end up needing to draw that sucker again. And now that's where it broke. So now we're looking at a potential change of trend, but we're still in that window there where we still look pretty good. So CEG, so ETR would be another one that I'd be looking at in this group. Pretty clean. I mean, one day down on Friday. If it wasn't for Friday, this is a really clean bull flag looking for another move to the upside. PEG, Southern, we both are looking at both of those as well. All right, so we got a few here. I'd probably be game planning CEG on the pullback, ETR on the pullback, PEG, and SO. Those would probably be the three that I'd be looking for next week. Yep, that would be it right there. All right, so we continue to go over to the list of stocks. I want to manipulate this list just a little bit more. We're just going to go from last week. So you can see we actually have this sorted based on how it's trading for April. Now we're going to break this down and look for some buying opportunities for the week and nothing for basic materials and energy that were even positive from Monday's opening price. Let's just see if we can go greater than zero. Is anything even positive from zero for the week? And it doesn't look that way. So there you go. Energy and basic materials from last week, nothing. So let's actually bring this one in and weekly greater than zero. All right. So the list expanded a little bit for consumer defensive, which again, as we just said, is consumer staples. So look at that, hitting it from different angles. There's a couple that we didn't see, SYY and MNST. So let's take a look at those guys again. SYY. Okay. Not bad. Still got a pretty solid move to the upside here. So this is why you got to hit your research and your game planning from different angles. So SYY, MNST, again, these are changed from the open from Monday through Friday. So there's two more that we just dug out that are interesting, right? They weren't on the list before. So let's keep digging. Let's go into technology. We know that IBM has been strong. Let's see if any other tech stocks meet that criteria. We're at least positive by zero, and we actually do. All right, so let me get that guy off the screen. So IBM, WDC, so chip stocks, interesting. All right, so net change from the open, IBM, WDC, MCHP. So let's take a look at those guys. See if we could break down and find some other ones. We obviously know IBM, just to give you a clear picture of what that was again. And by the way, this 138 level was monstrous and finally got through there. As long as it's above 138, if it's below 138, I'm going to leave it alone until it gets back above there. MCHP. Okay, so that was basically, and this is why you got to look at the charts. That's from here to here. So not really fantastic there at all, quite honestly. So again, this is why you got to dig into the charts. STX. Nope. WDC. No, still in the range. So really, even breaking that down a little further, nothing to do there other than IBM. So that's why you got to look at all of them. All right, so let's break down industrials for the week. And let's just make this more than zero. Let's see how. All right, so a bunch more came in for the week. We already covered all of these guys. PCAR and JCI. Let's take a look at those guys. Nope. But this is why you got to do it. You got to see which ones were strong for the week. Is there anything there to do? I know there was another, 3M. I know 3M actually had one good day last week in the middle of the range. But you know what? I would actually put an alert at 152 for 3M. So you get an idea of how you need to break it down and go through all of them. Let's take a look at healthcare, see if there's anything good there for the week on healthcare. LGVN, I'm not really trading. It's too illiquid. ABT for the week. Let's see if there's anything going on there. And if you're wondering right now, do I actually do all of this every night? The answer is yes. My game planning normally takes me around 90 minutes. I'm just giving you the tip of the iceberg here. So I'd have an alert set for ABT at 124. So until it gets above that level, nothing to do for me there. Let's hop on down into financials. Let's see if there's anything going on over here. SG. and COF. Let's see if there's anything going on in those guys. So right now we're really just looking at anything that was positive for last week. So nothing in SG, and COF was a breakout but pulled back. We actually had COF as a bearish snapback trade over here. Oh my gosh, that thing turned into a big winner on the short side. So let's finish up. We're just trying to break this down a little bit more. Consumer cyclical, we just talked about that before. Let's see if anything here is positive from BBBY. Actually had bad earnings guidance. I'm actually shocked that that one is in that list, but that's positive from the open after the gap because it gapped down after earnings. So let's take a look at that, and we'll take a look at Tesla. BBBY. You can see here, this is why it's positive. Really nothing going on there. And Tesla, which actually had one pretty good day after earnings, and so far it's selling since then. Can Tesla hang on to the $1,000 mark? So again, I can hear you saying, like, what is this? What is this screen again? We're now drilling it down a little bit more to what was positive from Monday's opening price last week, and at least above zero for the week, or as close to above zero as possible. So none of these really fit the criteria. TJ Maxx, McDonald's, they were actually up earlier in the week. Let's take a quick look at those guys to see if there's anything to look forward to. McDonald's, actually, it does. Okay, so let's break this down. Nice push off the low. That's the first break of the trend. So now, again, bearish U-turn into well offered. I'm looking for McDonald's to find buyers at Friday's low right there. And then I'm looking for this to step back up. Okay, so that's an interesting one there. I'm going to add that to the list to look at, and nothing to do in TJ Maxx. So let's finish up with the last one down here, communication services, which we just talked about before. We already mentioned Twitter and EA. Let's see if there's anything else in the list that might be interesting. And that's it. All right. So that's the basic breakdown of sector rotation heading into the week of April 28th. And if you want to take a quick screenshot of this, this is actually where we're looking right there. So we basically went through all of those groups. Healthcare is the only one that we did not, and we could actually probably do that on the opposite side of the market. So I'm going to actually do that. I'm going to break this down on the other side and what was negative for last week in this group right here. Put that in there, and you can see that's a much bigger list. I'm actually going to sort this by negative from the list. I'm going to take this off the screen, and we're going to look and see if there's any short sale opportunities in the healthcare stocks that were weak last week. And I know NVAX has been a bearish stock since the year started. We had a push down and a pause, another push down and a pause. Might be beyond the optimal entry a little bit, but definitely bearish. mRNA. So these COVID stocks are actually starting to break down a little bit. And Pfizer, which lost the 50-period moving average and continues to push to the downside as well. We also saw Lilly, and we've seen ABBV break down as well, which was one of the stronger stocks. I mean, look at this trend in ABBV for the better part of 8 weeks, and just gave it all up pretty quickly, which also is, by the way, a very important thing to know how to read the tape. And you need to know what time frame matters to you for how long you plan to be in the trade. So hope this also gives you a head start. If you have any questions, absolutely let me know. Thanks so much for joining me.